We'll quickly move on to the next. The next one is the first panel for the day at the Homepreneur Summit 2026, and a brilliant one, a brilliant topic as well. The topic is capital, REITs, and of course, fractional ownership. We have a solid lineup of panel who's going to come and take the stage here for you. Our first panelist for today serves as a India head of the alternative segment covering senior living, co-living, healthcare, and education asset. With over 25 years of experience in real estate, he brings deep expertise across investment advisory, asset strategy, and institutional capital. Ladies and gentlemen, the first panelist for the day, please put your hands together for Senior Managing Director at JLL India, Mr. Karan Singh Sodi, to kindly come and join us, please. I like how the claps are very soft. We could make it a little hard. A big round of applause. Thank you. Well, our next panel who's going to join Mr. Karan is the co-founder and CEO of Strata. Strata is an alternative investment platform for rethinking how investors across real estate opportunities. Since the inspection over 6 years ago, Strata has transacted more than 3,000 crores on the platform. Of course, our panel for today is also a lawyer by education. Please put your hands together for Sudarshan Lodha, co-founder, CEO, Strata, to kindly come and join us, please. And lastly, a solid panel requires a solid moderator. Our moderator for today is a seasoned global executive with over 2 decades of leadership experience at companies including Western Digital, SanDisk, GE, and just to name a few. Led business strategy, M&A, and large-scale R&D operations. And also serves as the board of TIE Bangalore. Ladies and gentlemen, she's in a bit of a hurry, Supria Dhanda. But still, I want to complete. Please put your hands together for Supria Dhanda, co-founder and managing partner, WYSER. Thank you. Over to you. Thank you.
Thank you so much. You couldn't have introduced me better with that one line saying she's always in a hurry. Thank you so much. What a wonderful morning. How are we doing? Sandeep, love you for that. Now that's one person's voice. Should we take it for everyone? Okay, let's get to the next question. We are going to discuss now capital, investment, right? So how many of you are ready with your checks? I'm going to give you 2 choices, REIT or fractional. How many of you? See, that's the issue. Fractional. Brilliant. So Darshan, you got to be happy, take it. He still wants more. Lovely. Very happy to be here. Thank you so much. We're going to discuss REITs and we're going to discuss fractional ownership. As someone who leads WYSER, which is all about agentic AI investments, it's a fund that we invest in. It's a 200 crore fund. That's a journey I started 3 years back with my partners. Love it. Asset classes have just become the new love. Property was my first love. And then, of course, the family came in. How is it that we are going to, what's the evolution of REITs in India? What's the fractional ownership? Are these financial products that we are unveiling? Is this new capital that we are unlocking? Are we democratizing the entire investment pool, which was earlier the bastion of few, institutional, UHNIs? You could only afford that. India is still a land of roti, kapda, makan. Now flip that to commercial real estate. That has been only a dream for many of them. And now that dream becomes accessible within your reach. And that conversation is what we will discuss with Karan and Sudarshan, because they are working on unlocking this, and they're part of the evolution that new asset class is burgeoning. So very happy to be here. We will have some learnings. We have discussed this a lot. We like an active conversation. So keep your smiles on, keep your notes on. Please be ready for Q&A. Well, that's when the conversation, if you don't like something, pause us. We are doing this for you. You're with me? Are we all excited to really know about REITs and fractional ownership? Come on, guys. Lovely. Okay, hand raise works. Karan, I'm going to just start with you now. Now, talk to us about the evolution. What happened? What led to the unlocking of this asset class from a very illiquid, closed, definitely not tradable asset to now complete liquidity, transparency, institutionalized with governance? What has the history been for the last 5-6 years?
Thank you. And thank you, Tai, for calling me here. So there's a bit of history, and I think I would request the audience to be patient. And I'll rewind way back to 2003, 2004, the timeline, because the reason why I want to touch upon that timeline. So in 1999, we had the dot-com crisis in Asia Pacific, more specifically. Commercial real estate was never an organized sector. To fast forward to 2003, 2004, slowly we saw evolution of IT becoming the center stage. The so-called call centers of the world. India became the call center hub. And till about 2005, most of the office real estate cumulatively across the top 7 cities was not more than 200 million square feet. To fast forward today, we are already 937 million square feet in office real estate. And the evolution was thanks to multiple factors. To start with, the first one was the promissory note 3. And pardon me for the technical aspect, but it is some inputs which led to everything. It was the first note released by the government of India to attract foreign direct investments way back in 2005. Then we saw a wave of multiple private equity firms who are asset managers and fund managers for multiple LPs and GPs who entered India. I don't know who advised them. It was definitely not JLL. They went around putting billions of dollars across tier 3, tier 4, tier 5 cities with no logical explanation of what the development would be. And then come 2008, Lehman crisis comes and hits. Then we see the global financial crisis. All of the investors who invested in India by 2008 literally wrote off all the value investment, went back, and they had post-its on their screens in US saying, India, I will never do it again, which was a big negative aspect. Now fast forward to 2012, Blackstone. Blackstone entered India in 2007, very smart strategy, only evaluated the Indian office real estate, looked at promoters who were willing to look at long-term holding assets rather than selling individual units to Strata sales. The first investment they did was in 2011, 2012, end of 2011, was at a 12% rental yield. And today, as we speak, we know Blackstone has been successfully listed 4 REITs, 3 office REITs, 1 retail REIT. And all of that has been possible because they went around the country. They actually explained to the corporate developers likes of Satwa, Rahejas, Panchil of the world across the country, DLFs, and then created the whole portfolio. And then come to 2015, SEBI introduced REITs as an investment note, allowing retail investors to participate in office real estate. But that also took time because there were too many parameters which were not correctively measured, which I think as an industry, people gave feedback to SEBI, and finally, all those aspects were sorted out. And 2019, we saw the first listing in August 2019, with a brilliant listing with Embassy based out of Bangalore, partnering with Blackstone, doing the first listing. And that's how the journey began. And I think the other aspect also, so real estate was never regulated. Come 2016, demonetization happened, capital sunk out. We have a very strong parallel economy, which is very dominant on residential real estate sales, which is why RERA was introduced in 2017, Real Estate Regulatory Act. And thanks to that and the GST and the demonetization, it brought transparency and gave confidence to investors. And the last bit before, it's been a long story, foreign investors, Blackstone's, Brookfield of the world, there was always a worry is how would we exit? We're investing, but we also have to pay back the investors with returns eventually. So REITs was the platform as an exit route. And what was very heartening to see, in the last 2 REITs which got listed in the last 2 years, majority exits or the buyers of REITs were asset management companies, mutual funds, insurance companies of Indian.
That is fascinating. So stay with that, Karan, for just a little bit. I think it's fascinating how you've looked at the entire journey, some key milestones, pivot moments, what happened. When we are looking at this now, how is the capital allocation moving? Because this is about democratizing wealth. As much as there are large players coming in, insurance players coming in, what is it, the retail investor? What's the play there, and how is that working out?
I think capital allocation from a private equity perspective is still strong for office, but we've seen evolution of industrial pickup in a big way. Retail, definitely, with Blackstone again leading the way, and now private developers are creating a portfolio which will eventually do a REIT listing. But kudos to the government to allow fractional ownership in the old avatar, way back in 2016, if I'm right on the timeline, Sudarshan, is allowing retail investors. So if we see all of us, right, I mean, we think investment in real estate is your home and then maybe a second home or rental income. But what is disappointing is the residential yields, right? It's anywhere between 1.5% in a city like Mumbai, max 2.5%. Vis-a-vis compared to office real estate asset, which can give you anywhere between 7.5% to about 9% returns. But the challenge was the ticket size was pretty big. And again, I'll give a personal story. I always advised Blackstones, Brookfield of the world to invest in large ticket size income generating assets. And those tune anywhere between 500 crores to about 1,000 crores, 2,000 crores. But I used to think, how will I ever participate? And fast forward to 2016, the evolution of fractional ownership. The government allowed retail investors like us to start investing in fractional ownership, which is backed by professional management, very well thought of strategy on returns, as well as secured investment. And I don't want to take away the sheen from Sudarshan because I'll let him give that aspect.
Brilliant, Karan. I think you built it. So you're happy now, you're investing, right?
Very happy.
Excellent. So that's a retail yes for a vote. And brilliant segue for Sudarshan, the disruptor. And you very nicely called out the audience to say, well, there are mostly startups and founders here. So Sudarshan, first we'll talk to the founder in you. What was broken? What was the gap that you fixed? I think that's something we would love to take away. And then obviously focus on this sector in particular to say that, grade A assets, large money, how is that getting, access democratized? And though I know the ticket sizes are a little larger than an REIT, the risk. So talk to us a little bit about this entire asset class.
No, so thank you, and thank you, Ty Bangalore. The genesis started leading to the thought what Karan mentioned is, Blackstone came in and really, I would say, corporatized this sector more than anything else. And they gave a new framework in which the sector can grow, which was honestly one of the biggest learnings the entire industry has gone through. And obviously, they've come through their learnings from US, where they've have billions of dollars of assets in general. But the market, to what Karan mentioned, Karan was advising them, buying them only 1,000, 5,000, 10,000 crore worth of assets as such. We realized there's a massive market which is assets from 50 to 500 or maybe till 1,000 as well, where there's no buyers or no organized institutional buyers who are buying these kind of assets in general, right? Today, if it's a sub 20, 30 crore asset, you throw a stone in Bandra, you'll find somebody with 25 crores of money who can buy a property of that nature. But today in Bombay, 25 crore gets you nothing. Probably a store, on Linking Street or whatever it is for that matter, which is probably not grade A in terms of, the compliances, the quality of tenant, etc. So the idea was that unfortunately HNIs today only get these opportunities. Before REITs, it was nothing at all as an opportunity for ultra HNIs or HNIs in general to also consider. Forget retail, that's a long drawn aspiration for them that, okay, we'll own the office where we work in, for that matter, which, eventually SEBI got the REIT framework. And today people, when they buy the REIT stock, and if they work, let's say at Accenture, they're buying the same office where they're working on. So the rent, what they are paying, they're eventually earning that back also in some way or for matter, right? So idea was to organize the unorganized white space in the market. And that's what it is as entrepreneurs, for us to find the white space. And how can we go deeper with tech or through a platform-led structure which can allow you to scale this entire market. So 50 to 500, obviously we never played in the 500 segment also, we played up to 250 crore segment. We realized there's a large opportunity for us to organize this space on the supply side. Then came on the demand side, which was much obvious. Karan mentioned that buying a second home is what, unfortunately today, if you buy a house, you have another crore, 2 crores to deploy. Where do you deploy in real estate? A plot of land or a residential? These are the only two opportunities which are available in general, because a decent commercial comes for about 20, 30, 50, 100, 200 crores in general, right? So where do you get opportunity? The traditional way is you call your friends and say, okay, guys, let's all pull in 1 crore. Let's put in money and buy the asset. Here's the thing about friendship when it comes to money. Is when you ask for money, they always doubt you. And when you don't give opportunity, they're like, tu hi kharid leta, you never come and tell me, mujhe bhi kharidna tha, etc. Right? So we've realized, and that was something I realized with my friends also. So I'm from Chennai. I came to Bangalore. We had some savings. We thought, let's put money. Very strong believer, obviously it's a homepreneur event as such, but very strong believer always to rent a home, never to buy a house, unless it's for capital gains purpose, which makes commercial sense as such. But I was very clear I'm never going to buy a house because my dad has left a house which I know I'll get inheritance someday or the other. There's no merit in buying another house in general. So we wanted to buy, and obviously 3-4 big learnings which we had at that time. First, my friends were in Chennai. I didn't know many people in Bangalore. Bangalore is a better story than Chennai, at least at that point in 2016. It still continues to be the better story in general as such. So we said, let's invest. People are like, hey, I don't understand the market, so I don't see the vision. Second, they said, I don't have the liquidity. Third, they're like, Sudarshan already has money. Why is he asking? So trust issues comes in at the same time. So opportunity was, okay, I didn't find, then I go to a party, because when it comes to investment, you go to only your inner circle of friends. You don't come to a platform like this and announce, kis ko Chancery Pavilion kharidna hai, raise your hands, let's all pull in 1 crore and let's pot, because it's large sums of money and you have trust issues. What if he doesn't want to sell? I want to sell. He may create an issue. I might get into trouble. My money might get stuck, etc. Right? So obviously the opportunity was, and that's when my lawyer hat came in. How can we organize a platform where the platform is governing the rules and like-minded people across India can participate and start owning an asset together? It can be a smaller check of 25-50 lakh for that matter, and can go up to 10-20 crores, whatever they wish to invest. But obviously the idea was to create a framework where there's a trust and a governing structure and people believe in that and they don't have to rely on each other's decision in general. Many developers in the city, at least in Bangalore, I don't know about Bombay, etc., used to sell 500,000 square feet. Prestige used to do, Purvankara used to do, etc. And those buildings today have a larger issue is because the tenants don't want to deal with 200 people. While Prestige will come and say, okay, I'll sign an asset management lease, sublease arrangement as such. But those investors, when they want to liquidate, becomes a large concern also for them. Because who's going to come and buy 500 square feet UDS in a, let's say in this hall, where you have no idea where is the 500 square feet as such, right? So the idea was to organize in a institutional way what was already happening in an unorganized manner and see in a large opportunity in general. That was first framework which we did. Second was the debt framework, which we felt is a very large opportunity for us to organize as well. Now, today, we're talking about $1 trillion economy in homepreneur business as such, right? It will be levered for the scale only if debt is also equally coming into the same segment, right? Now, banks and NBFCs are the two segments in which developers were raising money. Banks have limitations because RBI has put significant amount of limitations on them on how they can fund, what they can fund, thanks to the great developers in Noida who've thought how not to do business, and government got very smarter on how to protect people's interest in general. And I'm taking the liberty because I'm from Bangalore. I have no investments in Noida, so I don't worry about it. But having said that, and then comes the NBFCs and AIFs, which were assets. So private credit was a very large opportunity, which were again restricted to only large HNIs who could put in 5, 10, 20 crores into funds, and funds were deploying. Our idea was, can we democratize private credit as an opportunity as well? And that's what we started doing, where investors could put 25, 30 lakh, 50 lakh for that matter, and still make that 16, 18% coupon return, which these large funds were anyway making. Again, white space over there. Nobody was signing checks from 20 crore to about 100 crores. Everybody wants to do larger checks because easier to raise larger money and deploy larger money in general. So we started going after these smaller ticket sizes as such, and that's the trades which we've been doing.
Brilliant, Sudarshan. Excellent. Thank you for the entire flow of, what started, what you disrupted, and, you hitting your unicorns very soon? Not yet? Okay. We will address to the audience now, and we'll do it very quick. It's amazing how when you're on a panel, time flies. amazingly quick. Impact of budget? Quick, these are rapid fires.
So budget announcement, the recent one for data center, I think we've announced that we want to be the data center hub for the world, and there'll be tax holidays 2047. You will see a big impact because again, underlying asset class is real estate, and that will have a big impact. The other aspect is budget allowing REITs now to get LRDs from banks, which was never allowed. I mean, REITs were traditionally doing lease rental discounting of their portfolio through NBFCs, which is slightly expensive, but allowing banks is a big statement. And I'll just rewind a little bit back to 2021, COVID, supply chain issues from China, and the whole China plus one strategy is actually playing out very well. 15 sectors covered under the product link incentive scheme. Just to only pick up one sector out of that, telecommunication and mobile phones. 2022 financial year, Apple through Foxconn and Tata Electronics went into that scheme. First export was quarter of September 2023, was $1 billion. Last year, December 2025, they've touched $16 billion only in 1 year. So that's the growth. Just one example of PLI.
Well, this is Jerry Maguire, show me the money, and there's plenty, right? Brilliant. So kudos to data centers. Love the way India is growing. I think it's truly Viksit Bharat. Budget we've covered. Yeah. Whatever I ask Karan, I'm going to get a PhD answer. Start, origin, gap, and then impact. Brilliant. I love that. Impact of AI for you.
Great. Just to add on to one point to Karan. So all that $16 billion which was expected was all exported from Bangalore, right? So all of you from Bangalore, the opportunity is here because Foxconn is here in Hosur and in Dodbolapur or in Hoskote, where Malur side, where they have their factory. So everything is happening here. There's no third factory outside Bangalore. So for all home entrepreneurs in general, if so much is getting exported, which means more jobs are going to get created and there are significantly larger opportunity for us. The world is with AI and why data centers are also coming to India as such. Obviously, India is still a $1 wage economy, which makes it lucrative for them. Our government is more open to what we've been before. We understand AI. I mean, while we are having an AI summit as we speak right now, it just shows the proactiveness the government has been taking, which usually we've been very reactive, right? Ho jayega, uske baad we'll take actions in general as such. So again, with AI, which is coming in, obviously as entrepreneurs here, there's so much which you need to start leveraging, but also at the same time, from a real estate standpoint, there's so much of demand, whether it's real estate at the same time and everything else around the real estate is going to be a very, very large opportunity, which we foresee. So government's push to keep incentivizing them. The biggest push is the fact that there's a tax holiday till 2047 is a big thing as such, because today in US with whatever data centers are available, I think there is only about 3 or 5% capacity left. It's completely taken off. There's no space available for them. China and India are your two large bets where you can come in. World doesn't trust China. Good for us. World trusts India. But are we ready? We need to be ready, right? So whatever it takes as entrepreneurs to find that white space opportunity to figure out, you can go back to the California gold rush moment. This is a similar moment. You could be going after the gold, or you could be the suppliers who are helping those miners dig the gold, right? So, you know, as entrepreneurs with probably not as deeper capitals as the big boys like Reliance Adani might have, we can probably be the suppliers to them and make out the next Levi's in the making.
Brilliant. And I'm going to stay with you, Sudarshan, now, and Karan, I'll close with you, and we'll open up for audience quickly for 5 minutes. All of these new asset classes are burgeoning, right? They're all coming up, growing, and yet we all know that we're talking about gold and silver and some of the traditional stuff that we would like to invest in. I know I've been a person who's invested in properties throughout. It's just something that we are used to. These are habits and very difficult to break. And I also think that there is this entire asset class as an investor. I think we don't have awareness about it. And we obviously say that high risk. Well, that's the reason why it's high risk. How do we see this, two of you leading, your views around awareness? You talk about retail investor, we can go from 15K, we can go to 10 to 12, 20 lakh. How are you guys doing? What are you doing about that? And especially guiding them about the risks that are there in this investment along with returns. What's your accountability in education and awareness?
So, obviously when we were creating the industry, when we started in 2020, I think till 2023, we used to spend about half an hour to 45 minutes with an investor to educate them what we do. So in a 45 minutes call, 35 minutes we used to be about what we do, what is the structure, what is this SPV, what are the securities you get, etc. And 10 minutes used to be about the investment in general. fast forward today, we've educated people enough in a large way about what this industry is, and we just talk about a 10 minutes call about what this investment opportunity as we close, right? So still away. Having said that, we have only about 4,500 investors with the capital which we've deployed. That might be probably one building in Bangalore with those number of people in general, and we have I don't know how many buildings. So the number of investors are significantly high. So we've not even scratched the surface with respect to education about the space. But in a very nutshell, the way we've always positioned to people that this is real estate investment where you are getting something back, but look at this as an alternative to your debt portfolio in general, where if you're making an FD or a allocation you're doing for a second investment in real estate is probably REIT or SM REITs can be a great structure for you in general as such. The difference between REIT and SM REIT is equal to a mutual fund versus a direct stock. So if you feel UBCT is a great story, I know the story is great, and SM REIT brings you a UBCT, so you're taking a direct stock investment the way you would buy an Infosys or an HDFC stock directly. A REIT is not just one UBCT, might be 100 such UBCTs spread across India. It's a mutual fund. So your returns will be blended comparatively. So even if there's a 10% vacancy, instead of 9%, you're probably making 8.1. But in an SM REIT, if there's vacancy, you're making 0 as well, or you're making 10, 12% as well, right? So it's a hit or a miss comparatively, but that's the call one takes. But we advise people to look at this as an alternative to their second home, third home, fourth home, fifth home. I don't know how many other homes people have the fetish to keep buying, but we've got investors who've sold homes and started allocating, because it's not just about buying homes, it's also about managing these homes, right? Today,
We'll soon have a chat.
Today, is Karan a grade A client or JLL a grade A client? Because the minute Karan starts making money, he will buy his own house and start moving out to a better society, etc. But JLL is a far better grade A client who once stays, will stay invested in the property. You don't have, I'm using Karan as an example, but anybody who is buying a house and leasing it to any IT professional or anybody for that matter, vis-a-vis a company as another client, obviously he may be the MD of that company for that matter, but still the company is far better in terms of a grade A client, because he will move out, because he will grow in his career, he'll buy something bigger, etc. So home,
Brilliant.
second home versus this, that's what has been our predominant place. Karan,
Okay,
I'm sorry,
awesome.
I'm just using
Karan, I'm going to pause for that and throw the questions back to the audience. We got another 6 minutes, and brilliant. We have a question. Mike, please. 2 questions, 3, 4. Brilliant. Lovely to see conversions.
Hi, good afternoon. I just penned down a question for both of you all. This is from REIT and fractional ownership. From a residential real estate perspective, how viable are fractional ownership and REIT models aimed considering the rising land costs and the borrowing costs? The second part of this question is there a pathway for REIT structure to support greenfield projects in India?
So the second part I'll answer first. Currently, REITs and SM REITs are not allowed to do in greenfield. SM REITs, only 5% of unleased portfolio in the overall thing could be there. And for REITs, it's 20% of the portfolio can be under construction. So that's that part. So no, greenfield is not allowed. On your first part, I think residential doesn't stack up today. While SM REITs are allowed to invest in any income generating property, so they haven't defined is it office, resi, they can invest anywhere as long as in investment generating asset class. But like I mentioned earlier, the yields on residential is very low vis-a-vis office. So I think by default, you'll see more aspirations going towards buying office assets which are giving stable returns.
Thank you. Next question. There you go. My God, so many. We'll probably take a couple.
Yeah, I'm Shanbag from Noventic Value Point. The 2 questions. One is on the emerging co-working spaces classes, right? So we are getting opportunities. So want your view on that. And the second one is there is a movement beyond Bangalore, right? So where tier 2 cities are emerging as next development hubs. So do you have any recommendations? You have any plans in beyond Bangalore? Yeah.
Tier 2, you go for tier 2. I forgot
Okay,
the first
sure.
question. Sorry.
So tier 2 is honestly a very good opportunity. See, as investors, the concern comes to what Blackstone's concern was कि हम पैसा लगा दिया, अभी exit कैसे करेंगे, right? Who's going to buy me out in tier 2 markets? And tier 2 markets are also driven by a very large parallel economy, which becomes very difficult for institutional investors to come in a large way. Having said that, there is a significant demand to a lot of these managed office co-working players we've been talking. They all been talking about Bhubaneswar, Coimbatore, Kochi, Trivandrum, Guwahati for that matter, Jaipur, etc. So these are these markets which will go. So you have to go and look at the clear thing of China, right? If you want to become a large developed economy, you need to have not 4 or 5 mega cities. You need to have at least 30, 40 mega cities, each housing at least 10, 20 million people in general, right? Bare minimum for that matter. Today, that's Bangalore for you today. But it's very sad that it's only for 7, 10, 12 cities at max where you can say you have about 10, 20 million people staying in these kind of markets, right? So eventually urbanization will happen. Like I said, the world is not trusting China, world will trust India. So a lot of money will come to India, which means urbanization, manufacturing. The China plus one push has been, while Karan just gave an example of Apple as a thing, it is effectively one example of one thing. There's so many other sectors, footwear for that matter. Everything is getting, in a large way, getting manufactured here. Electronics, bunch of other sectors have gone through these transformations. These are starting points. Will go through another 5-10 year horizon, but the world is chasing for a country where they can deploy large capital as such, and India seems to be a great opportunity for them to put in. So urbanization will be large. Hence, tier 2 markets in terms of the growth and the best return is tier 2 undoubtedly. But that's a bold investor's call, hoping that there can be a liquidation window can come in for tier 2 markets.
And on managed office players, just one input. It's a stable sector. I think they've been able to help corporate enterprises fix the capital allocation, given flexibility and investment. So given we came out of COVID, return to work was slow, especially this city, unlike other cities. And if people wanted to expand and put seats and hybrid expansion, unplanned and unbudgeted, that's where managed office players have come in. Just to give you statistics, they started entering India in 2017. In the overall absorption, they were 1% in 2017. Effectively, 2025, 23% of overall India's absorption in office is now managed office players. So pretty stable.
Thank you. Hi, Supria. I can say you are awesome, your energy. I'll just introduce myself. I'm Rekha Thakur, and I'm a Gujarati by born. So Gujaratis understand only two things: business and money. Okay. So my first question to Mr. Karan is, because I'm also into funding, majority of my investors only look into funding for businesses, which are more of a B2B model. So let's say even if it is in terms of real estate or constructions, they prefer investing only into industries and commercial properties. When it comes to residential, they always see, the builders with a red, or probably, if I have to talk a little, softer model, it will be an orange flag. And so how do you, refer, or you can say put a ratio to it? And in future also, what do you see in terms of ratio when it comes to real estate funding, especially for the residentials compared to industrials and commercials? And my second question is to Sudarshan. We've been talking about now Gen Zs taking over. What do you see the significance of Bitcoin coming into the real estate funding world? So in terms of investments, how will, Bitcoin or digital money play a vital role here?
So to your first question, I think allocation still continues to dominate in office premises, followed by industrial and retail. Residential, people shy away because, again, it's very subjective, it's very location driven, very developer driven. What's the intent? Will you return the money or not? So I think people avoid, especially private capital, HNI capital, they would avoid doing that funding. So predominantly office.
No, I was talking in the norms of when you're talking about Blackstone, so I'm talking on that level. When it comes to investment fundings to the residential projects, even if it is a 2-tier or even 1-tier city, when it comes to funding to real estate projects, they are always skeptical whether to go ahead with this or not.
Yeah, so residential as a sector was never so equity flowing till very recent times. Thankfully, Japanese funds are now leading the way. We've seen 3 investments announced already in the country and deployed. One is Sumitomo Corporation with Krishna Motors in Gurgaon. Krishumi is the development name. Second is right here in Bangalore. Birla Estates got funding from Mitsubishi Estates for a residential project SPV level development. And Sumitomo Realty has also put in equity for residential development in Mumbai. So it's good to see residential pick up. And I think JAPs are leading the way. Eventually, typically US corporates, the US funds are shying away from residential. But that being said, Blackstone went ahead and purchased Kolte Patil as a company. So that's their foray into start testing the residential market. So I think the next 6-7 years, we'll see more residential equity being poured in.
So you see the ratio growing towards residential as well.
Yes.
Thank you.
But all that money right now, the institutional money goes in the form of debt. So there's a massive allocation happening. Equity money is very less to what Karan was mentioning, but debt allocation has been very, very high in the residential sector to these people, because that's where the real money is coming for them to build these large townships. So your question on Bitcoin, unlikely, and I don't foresee it happening at least in the next 10 years also. Raghav Chadda goes in parliament and keeps shouting, please, let's legalize this, let's figure out a framework. But the fact that there's no response to him clearly shows that the government is absolutely not interested to promote or formalize this in any way. And across the world also, like even Netherlands, or EU for that matter, I think have put a thing that even if you have these Bitcoin or these crypto things, unrealized profits also are eligible for taxation at 36%, right? So world will move, it is required, but for India, it's too far away to do it. In fact, even tokenization, which is what SM REITs or REITs are doing, right? Tokenizing in some way, but just tokenizing it through a blockchain framework has not been something. I know so many startups in Bangalore or in Noida also for that matter have been trying to put forth a word to government saying, why don't you do this? This is a great framework, including Mr. Raghav Chadda for that matter. But absolutely silence. I don't think so. They have, even in their P10 agendas, that this is something is priority for us to even consider. So very, very far away. Dubai, multiple markets have explored this, are doing it for that matter. But India, we are too far away from it.
Perfect. Thank you, Sudarshan. Thank you, Karan. There are going to be questions and maybe request. Time is up and it's been taking that deep red, which none of us like. But please, I'm sure the panelists will be there for a tea break or whenever you have time, have a chat with them. I hope you thoroughly enjoyed the session. We've looked at REIT, we've looked at fractional ownership, we've looked at an entire asset class emerging, and what was once a fiefdom and bastion of only institutional, large, ultra HNI players, to now democratizing wealth, unlocking, and I think we have a huge, progress that we are seeing, both at an institutional and a retail and a platform that's growing. We will chat. Definitely would love to explore. But yeah, thank you for your time. Karan, fabulous. I think you're an encyclopedia. Anything we ask you, we get the entire genesis to where the future is going. And Sudarshan, thank you so much for building a fabulous startup and giving an opportunity to everyone. Enjoyed the time. Thank you. Thank you, Ty.
Thank you. We want all of you to stay. But lastly, a big round of applause for our moderator, please. Thank you. Well, a little something from our side, a token of thank you for a brilliant session. I request Mr. Srikanth Iyer to kindly come and join us, please. Board member Ty, CEO, co-founder, Homely, to kindly present a small token of thank you to everybody. And a big round of applause, please. Srikanth, we want you to join for a group picture. Let's hear it for the one last time. Great panel. Amazing. Thank you. Thank you. Thank you very much.